After a challenging year, I'm incredibly proud of my colleagues and the work that our BK team has done to provide extraordinary service to our customers and to show the best results in the history of the bank. You know, we made 37 million US last year. That's up from about 34 million the year prior. Most of us feared going into the pandemic that we would suffer, let alone have the opportunity to break even. But as it turns out, our digitalization, our efforts to modernize and to improve the experience for our customer proved so positive that we were able to even increase, and not only maintain, but increase our market position during this pandemic. So during the pandemic, we learned a lot. We learned a lot about some of our weaker points that we needed to improve, but I would say for the most part, we went from strength to strength. We showed that we could work remotely, that we can do things at a distance. We showed that we were really making a difference to improve the customer experience overall. So first of all, where clients needed a little more support during challenging and difficult times, we look at ourselves as a partner, not just a bank servicing people, but we consider ourselves to be side by side with our clients and our customers. So we extended some grace periods, we were lenient where we needed to be, but at the same time, we didn't sacrifice the overall financial discipline necessary to run a successful bank. So we navigated this fine line, I believe, in a way that made me, as chairman, very proud of our staff and our team. Dr. Diane Karasisi did an unbelievable job. The team performed above and beyond the call of duty. As far as the dividend is concerned, our shareholders look for two things. One is they look for capital growth and they look for dividends. Most shareholders, and as you know, I consider myself to be a shareholder as well, we're more interested in long-term capital growth. That's why we invest in banks. We don't do it just for the dividend. Having said that, the dividend is important, and it's important to some of our smaller local retail shareholders. It's something that our institutional investors consider to be meaningful, so we want to be mindful and respectful of the dividend. Now, the central bank allowed us to declare the dividend for 2019, but not yet pay it. We have to pay it at some point. We've accounted for it. It's a liability on our books, and I'm certain that we will pay it. Out of prudence and caution, wasn't something I necessarily with which I necessarily agreed, but the central bank put the brakes on the idea of a 2020 dividend. It was met with mixed reaction from our investors. I think there are several things I would say, Colin. One is that long-term, investors want to know about predictability and stability. In the case of BK, we more than met the test and more than rised to the occasion. So it didn't really affect us at all in terms of our ability to pay. We had full ability to meet that dividend, but for whatever reason in their wisdom, the central bank decided that we should not pay in 2020. I believe we will resume to a full, healthy dividend in 2021, and I also believe that we will soon give guidance to investors that they might even be able to expect a more significant dividend for the 2021 year. So the group performance will be dictated by several things. It will be dictated by the bottom line net income. It'll be dictated by how the market sees our growth potential. And it will also be influenced by how investors perceive Rwanda at large as an investment destination. Under the amazing inspirational leadership of President Kagame, this is the most attractive investment market right now in Africa. When it comes to the evolution of capital markets, for a long time, BK and Bralirwa more or less sat as the two market leaders. Now, with the listing of MTN, and by the way, we were just thrilled and honored that MTN selected BK Capital to help manage the listing. Now we have what they call the triple pillar of the largest bank, the largest mobile phone company, and the largest brewery. And these are the three staples that every foreign investor looks to measure the growth of the country. So it won't impact the performance of the group directly, but it will impact in my view, the performance of our share price, because there will be a larger critical mass of investors that will now see a menu of opportunities, a smorgasbord buffet of companies in which to invest. And this is really important. Our growth is very strong. We can see it in the activity of the bank even for the first quarter of this year. As management and as the board, we are incredibly optimistic about the future. We're aggressively reinvesting in technology, in further digital transformation, in our equipment. For instance, we have dozens of new ATM machines, state-of-the-art, modern machines that will not only express cash and do it accurately and quickly, but take cash as well. We're going to be rolling out video banking to some of the more rural and remote branches so that our customers in those areas will have the same benefits as customers here in Kigali, to the right expertise and support within the bank. So across the network, we have exciting plans. Further, if you look at our branches, if you look at our Ramira branch and our Kigali Heights branch, you will see that models exist for the new prototype of the 2021, 2022 type of bank. Our banks now look more like Apple stores, where there are tables in the front, well-informed staff are moving about the floor, where there are dozens of tablets and iPads at tables for customers to use to transact. And we're teaching and training our customers in such a way that they will feel very comfortable to use these services remotely from home in the future. And this will be a tremendous convenience for our clients. A market like Rwanda has several advantages, but I think the chief advantage is that because we are what I call a lean, mean market. We're small, but we're forceful. And it means that we can leapfrog over generations of technology. And we're going to roll out a whole suite of products in the second half of the year, which are going to be extremely transformational. To me, the most underserved sector when it comes to banking and finance is agriculture. As recently as 2 years ago, agriculture was 30% of the economy, still is, but 2 years ago was only represented 6% of bank lending. Now, through our ICOFI project and the amazing work of Dr. Karasisi and our team, we have significantly closed that gap and increased our lending to the agricultural sector. Beyond agriculture, metals and mining are going to be an increasingly attractive growth sector. A lot of us believe there may be lithium in abundant supplies here in the country. The sky's the limit. So the natural resource sector is also going to be important. But the service sector in this country is going to be another winning part of the economy. And it's best served by the wonderful, inspirational work of the Kigali International Financial Center, which I believe is going to create important preconditions for companies to succeed here in the country.